Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Let's take a look at the Forex market again. So currently, as on the euro currency, as on the Great British pound, we have very similar charts. We have talked about this on Friday. So as usual, we have prepared the weekly report, and one of the topics was the a bit curious reaction of the market on recent payrolls numbers. And we have trying to dig it a bit deeper, the overall situation that stands right now, and come to some interesting conclusions that you could read in report. So speaking just about the current situation, it seems that market mostly, well, just ignored the recent data. And it seems that markets across the board are just losing confidence, as with the Jerome Powell, as with the statistics that are published right now in the United States. Just because by the overall logic with the recent data that we've got, stock market should go down, dollar should keep rising, gold should go down, just because it's just higher interest rates, just because in general the inflation stands in the wages, although it had decreased slightly, and market shows very strong amount of the payrolls. But after some minor reaction, you can see that market goes in the opposite direction. So it makes us think that the trust of the market in overall statistics that are published right now significantly diminished. It's just because of, as you know, multiple revisions of the payrolls. It will be seasonal adjusted, non-seasonal adjusted. Then we will got the CPI calculation method to be reviewed a couple months ago when they start using the average of the last year instead of the previous 2 years. It's just to reduce the difference between the previous numbers and the current numbers. So the base is standing a bit higher, and that shows that inflation seems a bit lower. And finally, it seems that the overall manipulation still stands so that, well, slightly to cover the real drop in economy and the gross domestic product. So they show partially some nominal inflation and shows some nominal rise in the wages, which is disguised each other and shows that probably, well, it's no recession, this economy showing very low growth, but still it shows the growth. And that's what's going on currently in the statistics. That's what we could see currently, actually, based on the numbers that we've got. So that's what concerning about the payrolls numbers. Speaking on the technical picture, well, currently we do not have any really big surprises with the performance. It's just because we talked about in last week that market is testing the strong confidence support in the weekly chart. Once XOP has been completed, it shows in the bounce. And currently very interesting first with the pattern that will be formed here, which is actually probably will be the hand and shoulders as we estimated yesterday. So this is definitely not the way of the 3 drive. It potentially was possible in the morning on Friday. And currently it's a big question how strong upward bounce will be, because it is vital for different patterns. So for instance, if we will get the double repo buy right there, it means that we should go on higher standing levels. In this case, pullback might be somewhere to the 10750 or even retesting of this trend line. It is possible. And this is important for the weekly chart, because on the weekly we have great downside thrust whole way down. And the 30% retracement, you understand that it will give us a weekly bread and butter sell. So potentially that might be a great opportunity for taking the short position on the weekly chart, if of course market will get there. And to be sure that this will happen, we need to get here, for example, double repo pattern. If we get the bread butter instead, just moving 10640, it's minor retracement, it's probably this pullback will happen here. Currently, guys, with the situation in Israel, you probably heard about this. it's very difficult to suggest what will happen on Monday, because if this conflict will be a bit longer, the demand for United States dollar could increase, and on a Monday we could get just a drop here and rising United States dollar by geopolitical factors. That's why currently I even not dare to suggest how market will open on Monday. I prefer to see what will happen. Potentially, if we'll take a look at the intraday charts, potentially we could get, as I said, hand shoulders. Now the question is whether we should treat this spike down as a shoulder already, or it's another shoulder still will be formed later with this downward reaction. It is not clear yet what the particular shape of the hand shoulders will be. And this is the reason why I think that on Monday we just need to sit in the hands and see with the performance. In particular, we have to keep an eye on the two levels. First one, I suppose, somewhere around 105.20. It's between these fib levels, so retracement might be. And second, what is more important, watching for these lows. It is a vital point for short-term bullish context. If by some reason you will see drop below these lows, the market will erase this rally. Do not take any long position, because in this case all the stuff that we're talking about, the hand and shoulders and other, will be erased. It could mean that market just keep going lower and we will be ready for breakout of these lows. So to keep this bullish context, market has to stay above these lows. And watching for this one is just because, well, they give us the minimum risk, so this market will drop right there, so our risk will be just to the invalidation point. Of course, you could consider other levels. Maybe you will even try to take position partially, so step by step, so taking some part here, market will drop low, taking another one right there, and so on. Well, I actually would like to see a couple of things. First of all, market reaction on the conflict in Israel. So I do not want to see big collapse. That should keep us aside from the taking long position. This is the first moment that I would like to see. Second, I just would like to get the entry levels that will give us the acceptable risk. So not too much risk because of the invalidation point right there. So that's just what we have on euro currency. Probably the same logic you could apply to the Great British pound. So let's see what will happen on Monday.